mega technical analysis disregarding all fundamentals or business models or financials or insider sentiment, anything like that. I'm just giving you guys short-term predictions based on what I'm seeing solely in the charts. Please don't get mad if I am trashing on your company. You can, whatever, but this is just what I'm seeing in the charts. Short-term predictions based on what I'm seeing with the price action. Starting off with ticker symbol SENS, we do have this symmetrical triangle. We did get a bounce recently off this ascending level of support, and the price target for the symmetrical triangle / bull flag / bull pennant, whatever you want to call it, is above $6. That does not mean you should just go run into the stock. If you can get an entry point on one of these levels, really right now, if you're long-term bullish on this stock, if you're bullish long-term, this is a great entry point right now because we will probably be breaking to the upside. Bull pennants typically do break to the upside, and this is if you are bullish on this company long-term, this is not a bad opportunity to buy, in my opinion. On the 4-hourly RSI, Relative Strength Index, we're looking at 38.51. Anything over 70 is going to be overbought. Anything under 30 is oversold. Taking a look at the MACD, what you want to see is the MACD line, the orange line, cross over the signal line. If you're confused on how I'm getting these numbers, look right here. Here's your key right here. You want to see the MACD line cross above the signal line, the orange cross above the blue. Right when the price action starts tightening down and we start seeing it go up or down. If it does go down here, if it does break to the downside, your price target is going to be all the way down there, okay? Less than $1, okay? Very unlikely, very, very unlikely, but you never know. You never know. If this does dip below due to like a flash crash or the market's just dumping or whatever it is, another level to watch, draw these charts up on your own because I'm not going to be able to predict exactly what level this is going to be because the 200-day exponential moving average on the 4-hourly, this red line right here, it has typically the moving averages. Obviously, if if you've been watching the videos, they act as support and resistance levels. And we did get a very strong bounce last time we touched this on the 23rd of February. Watch for an entry point on there. If it dips below that, obviously you guys already know 61.8% retracement level, sitting at roughly $2.83. Then your next level is going to be $2 abound. Okay, I don't see this dipping all the way to $2 unless we get a correction, like a bad correction or a crash. But yeah, in my opinion, this is not a bad entry point right now. I would not be surprised if we do break to the upside and then we start tearing down these walls, these resistance levels, and start heading back up to all-time highs, or at least 52-week highs, I believe, for this stock. Let's take a look at the daily moving averages, see the golden crosses, death crosses, see what we're dealing with. We did recently have the second most important golden cross on the 25th of January, the 55-day moving average, in my opinion, right? It's some other people will have different opinions as far as I do when it comes to moving averages and their golden crosses and death crosses. But for me, this is the second most important one. The 55-day moving average, this teal line crossing above the 200-day EMA. Another way to say that would be the 200-day EMA crossing underneath the 55-day moving average. And the most important one is going to be the 200-day EMA, the red one crossing underneath the orange one. If you're confused on how I'm getting this is your key right here, okay? 15-day moving average, 213K. It's pretty simple. So that's what we're looking at on the RSI. On the daily, we're around neutral. But on the 4-hourly, guys, on the daily, we're going to be a little bit overbought. Okay, look at the run up. We were at 30 cents last year, like right pretty soon, really. Okay, basically this year we were at almost the 12th. All right, December 2021. Okay, we were less than 50 cents, and now we're doing pretty well. We're above $3 now, so that's why this RSI, if it's not going to glitch, let's try that again, is at 50. That's why it's a little overbought in my opinion. So the 4-hourly will be a little more accurate as far as short term and based on the most recent price action. That's why I think this is oversold. That's one of the reasons why I think this is a good buy. This will probably go to the upside in my opinion. That's what we're looking at as far as this one. Taking a look at ticker symbol AAPL, Apple. We did recently have a pretty massive sell-off. This is the weekly chart. Usually we don't look at the weekly chart, but this one actually has a pretty interesting chart setup. We have this level of ascending support that was validated perfectly all the way back in the start of 2020 in March. But we did validate that level perfectly, basically. And guys, I would not be surprised if we are just going to be bouncing up in this uptrending channel for the foreseeable future, unless flash crashes, correction, crash, even a major crash. crash. Okay, I don't think that's happening. But if we do, I could see a candle wick down, and then, next couple of days or next couple of hours, we bounce right back into this channel. If not, probably we would break above this ascending resistance line and then have this as a new support. One of those two options. Okay, this stock is probably, I don't see this stock really as, I hate Apple as a company, but, not as a stock, but as a company, I'm not the biggest fan of them. But if you like the stock, this is not a bad entry point right now, in my opinion. We are closer to this bottom ascending level than we are to this top, this ascending resistance level, But guys, we do have some sell signals, according to the MACD and the RSI. Well, not really the RSI, but at least the MACD we do. Okay, we have the MACD line crossing far below the signal line. That is very bearish. That represents very bearish momentum, in my opinion. And the RSI, on the weekly, we are at 50. Let's take a look at the daily RSI though. Okay, all right, guys, this is, you see what I'm talking about. Okay, we're at 29 on the RSI. We're below oversold. We are totally oversold on the daily. So this is not a horrible entry point, in my opinion. Okay, look at the moving averages. We obviously, we have every golden cross you could essentially want. Well, at least the two most important ones. We have the 200-day EMA below the 15-day EMA and the 55-day EMA above the 200-day EMA. Taking a look at the Bollinger Bands, see if we get any indication for where price action will go in the near future. With these bad boys, I'm not really seeing, they're not really doing much. This one is coming in a little bit. That could signal some decreased volatility. Let's take a look at the daily Bollinger Band, see if we got anything. Okay, there's really nothing there either. All right, well, so much for the bands, right? Well, not every indicator, a different chart setup. Different chart setups call for different indicators that will have more weight in your total technical analysis opinion than others do. So that's what we're looking. We have some death crosses coming. Well, we technically don't, but we will probably soon. If we look at the daily, we probably have some death crosses. Yeah, we do. Okay, we have the 13-day moving average. If you're confused on how I'm getting these numbers, this is what you want to look at: the moving averages and the exponential moving averages. The 13-day moving average it did cross underneath the 21-day and the 15-day moving average. That is a death cross. That is a small death cross, but not a really important death cross, in my opinion. Also on the daily, we are going to have the exponential moving average slowly creeping up. That is going to be a good entry point as well. If we do dip to this level, if you're looking for for a really good entry point and you want to be safe, let's look at the weekly. So anywhere from $1.19, $1.18 up to $1.21. We're at 121 right now. We're basically there. If you want to get an entry point now, this is not a horrible place. If you want to wait till, $100.19, $100.18. That's roughly probably your best entry point if we do pull back that much. But guys, be careful. If the markets dip, Apple's screwed, right? Well, not really screwed, right? They have a ton of cash on hand, right? I've seen their balance sheet, right? But, this ascending level will break if the markets continue to dump and we do get a correction. But that is just a great buying opportunity, in my opinion. Not big on this company. I don't recommend buying this company or any low growth stock for that matter. But for some people with the right investment goals and the right risk tolerances, not necessarily the right ones, but if you have low risk tolerance, not very ambitious financial goals, this is not a bad option. So this is not a bad entry point, in my opinion. I think it's likely that we see it just kind of go something like this, or if it does break, then use this as a new support. Obviously, the resistance levels, once you break them, they will act as new support, just bounce off this. So something like that is probably likely, in my opinion. That's what we're looking at as far as Apple. Ticker symbol UAVS. We do this descending triangle pattern. This is a bearish pattern, and I don't want to freak anyone out, but let's draw up a price target now. I want you to realize while I'm drawing this up, this is not, the price targets are not always accurate, especially the bearish ones. As you can probably tell. Let's go with the daily so we can actually see the price target. We're looking at negative. Price target based on the descending triangle is being delisted off the NASDAQ. That's essentially what it's going to be looking at, guys. I don't think that's happening. We saw this with Bitcoin. The price target was $23,000 or something, something really low. And obviously it did not happen. Obviously after it broke out of that descendant triangle, it broke to the upside, and then it was just boom. It was all the way up to 50,000. Now we're at 47,000. So Guys, this is not, I don't see this breaking to the downside. And if we do, I definitely don't see us going to the going to negative $2. All right. Your levels of your entry points, if you're very bullish on the stock and you want to get a long-term position, this is not a great entry point, but it's not bad either. I would say, in my opinion, $6.74 going up to $7.50 roughly. You might want to set your buy limit at $7.51 because it may not dip below that again. Maybe it will, maybe it won't. But the best entry point, if it does dip this low, watch out for this. If it does actually dip this low, $6.10, that's going to be your strongest level, in my opinion. If it does, we're already pretty oversold. We're sitting at 39.68. We could go a little more. Obviously, we already validated this level perfectly once before, and the level, it has acted as a little bit of support, not really so much as resistance, a little bit, but it has been validated plenty of times. That's going to be a great entry point, guys. It's not exactly clear to me if this triangle is actually going to be, if this is going to be the triangle or if this is going to be the triangle. Okay, if that doesn't make sense, I don't know if the support level of this descending triangle is going to be this green level or this Fibonacci level. In my opinion, I think there's a higher chance of this right here. I think there's a higher chance of this green level being the horizontal level of support in this descending triangle. But either way, guys, anywhere from $6 all the way up to $7.50, anywhere in that range will be a good entry point if you are very bullish on the stock long term. That will be a very good entry point. But guys, we do have some bearish news. All right, let's take a look at the 4-hourly moving averages. This sell off has been so intense. We went from $17 all the way down to $8. So obviously, the moving averages, it's not looking too good. We have several death crosses on the 4-hourly. We have that 200-day EMA crossing above and over the 15-day moving average. That is the worst golden cross literally to have, but it is on the 4-hourly. Keep that in mind. The daily moving averages they bear even more weight, in my opinion, than the 4-hourly. We also have the 55-day moving average crossing above the 15-day, the 13-day, and the 21-day. That's not good, obviously. But if we take a look at the daily, we also have more bearish news, but also good news. So don't freak out. This is still a good entry point, guys. A lot of this sell-off was probably due to the broader markets. All right, everything is literally bleeding right now, mostly because of the broader markets. Okay, at least a lot of it is that. Okay, but if we take a look at the daily, this 55-day moving average, the teal one right here, it has acted as a strong level of support in the past, and obviously moving averages, especially the daily moving averages, especially these ones that I have set, in my opinion, they act as significant support and resistance levels, especially the broader ones like the 200-day AMA, the 55-day, and sometimes the 21-day moving average. Not so much as these ones, but still take it for what it is. Because we have the price action, we are now below. In terms of price, the 55-day moving average is extremely bearish. This will be acting as a significant level of resistance until we can break out and then confirm it as a new support. So that's bearish, but guys, we still have the most important ones. We still have the 55-day moving MA above the 200-day MA, and the 15-day moving average is above the 200-day exponential moving average. So the two most important golden crosses are there. On the daily relative strength index, we're looking at 41.78. What you want to see on the MACD when we come to this, let's look at the 4-hourly. What you want to see is this orange line cross over and gap above the signal line. And we are on the 4-hourly, we are seeing the MACD line is actually above the signal line barely, but also make sure you guys are eyeing the daily as well, because don't be fooled, guys. Every different chart is going to give you a little slight variation of the MACD and RSI and the moving averages. And so just keep that in mind. On the daily, the MACD line is nowhere close to crossing over the signal line. So watch for at least a sign of some life on a daily maybe before you go in on the stock. But guys, as I said, if you can get it on the entry point, yes, this MACD is not really a buy signal right now. But if you see the orange line start to cross the signal line, that is going to be an extremely auspicious buy zone. And if you want to play the breakout, that's not a bad option. Let's say we trade sideways for a little bit and then we come right all the way up here, right to where the price action is going to be the most condensed, balancing between these two levels of support and this descending level of resistance, or just one of these levels of support, whichever one it actually turns out to be. In this descending triangle, we will find out pretty soon probably. Play the breakout maybe. Look on the daily RSI, look on the 4-hourly RSI, see how the MACD is doing. Once this orange line does cross over the blue line on the daily, there is a high chance, a very high chance in my opinion, that you will see some upside short term based on the MACD. But of course, make sure you're looking at the RSI, the moving averages, the support and resistance, the Fibonacci's, the price action. Take everything into account. Okay. And this is just the technical analysis. Of course, you got a ton of other research you got to do as well as far as the company if you're actually thinking about investing in any of these stocks, in my opinion, at least. So that's what we're looking at as far as UAVS. Taking a look at XONE, we do have another descending triangle. This is, it is a bearish macroscopic chart pattern. But guys, if you just look at what happened with Bitcoin, it was a descending triangle. The price target was way down. Let's go ahead and draw the price target. Actually, speaking of price targets, because Bitcoin literally, the price target was like 20,000 something, and Bitcoin was like, right when it broke to the upside, it just went to the races. So obviously that's what I'm telling you is these price targets and these chart patterns, these descending triangles, they're not always accurate. And guys, this is what I mean. Okay. The price target is negative. All right, that's not happening. I don't think that's going to happen at least. Okay, of course, I guess it's possible. I guess it's possible they could get delisted. Right? I've not seen that happening though, and I'm not taking the company into consideration here, guys. But we're not going to negative. We're not going all the way down there. We're at $60 right now. All right, but guys, if you're thinking about getting an entry point on the stock, your levels to watch on the 4-hourly chart, we actually have the 200-day exponential moving average propelling the stock higher. But if you see a dip down to $31.90. Or all the way down to $28.84. Anywhere in that range, probably your most likely choice is probably going to be $31.90, or just because of all the buy limit orders, the buy walls, right? $32.01. I would say your buy limit order there, if you want to be very safe and you want to be sure that you get an entry point on the stock, $32.01. If we do dip there, that is not a bad entry point. A better entry point would obviously be anything under $32 if it dips that low. We are fairly oversold in RSI. We were looking at 38.23, and a lot of the sell-off, similar to UAVS and a lot of the others, the sell-off has been caused at least partially, if not mostly, because of the broader markets. All right, everything is bleeding right now. Everything is bleeding essentially. I mean, almost everything is bleeding because the broader markets are at least partially. So we do have a lot of descending triangles and a lot of bearish short-term formations. But let's take a look at the daily relative strength index, see what we're looking at. We are on the oversold side. We're closer to being oversold. We're basically neutral. We're at 46.57. Taking a look at the MACD, we have extremely bearish news. Obviously, the MACD line, you want to see the MACD line cross above the signal line. That's what you ideally want to see when you're getting an entry point into a stop. But guys, let's take a look at the 4-hourly MACD. Okay, guys, MACD line, I mean, they're basically, it's kind of, I can't even really tell. They're both, like, it's anyone's game at this point. The MACD line could go to the upside, and if it does, once we break this descending level of resistance, look for the confirmation, look for the MACD, and look for the confirmation that this is the new support. If we pull back after breaking out, that's going to be an entry point though. Once we break out, draw these charts up on your own. Webull is a great broker. You can easily get access to it. Okay. But if we do breakout, you can play the breakout. That's not a bad option in this stock. Playing the breakout, or, they're usually pretty high probability trades if you know what you're doing. So that's what we're looking at. Let's take a look at some macroscopic moving averages on the daily. We do have the two most important golden crosses. We have the 55-day MA above the 200-day exponential moving average, and we have the 200-day EMA underneath the 15-day moving average. If you're confused on how I'm getting these numbers, here you go. This is your key right here. So that's essentially what we're looking at. If you want to get an entry point, like I said, this green level, that's going to be what you want to watch. We do have several touch points on both of these levels, so I am fairly confident. And this green level, this rectangular level, and this sitting on top, literally, of this 61.8% retracement level, sitting at $32 roughly, it has acted as a level of resistance in the past and a level of support. So, as recently as the 25th, right, a couple of days ago. So this is essentially the chart pattern. I'm pretty sure of it. With UAVS and the last one, right, it was like the descending level. It was not exactly sure where the support level was. With this one, I'm pretty confident if you get in at $32.01 long term, if this is a good company. I don't know much about this company. I don't know. I'm not looking at the fundamentals, but based on the technicals, short term, you're probably going to be looking pretty good, in my opinion. And I can always be wrong, but that's what we're looking at as far as this one goes. Taking a look at OPTT, this is an interesting one. We have several touch points. We basically have a very, very large symmetrical triangle, at least on the ascending support side, and on the descending resistance line, not so much. Only 22nd January, 25th in January. So, but this ascending level has been validated going as far back as like as September. Last year, 22nd. Okay, there's some iffy touch points back then, even farther than that. And this level has been validated perfectly, literally last week of trading. So, guys, this is a pretty auspicious buy zone in my opinion right now. We are pretty close to the support line, and this is a bullish chart pattern. Let's go ahead and draw a price target, see where we would be landing if this bull pennant price target was to come to fruition. We're looking at $8.14. Sorry, that's more than all-time highs, or at least more than, maybe not all-time highs, but at least 52-week highs, I believe. Nonetheless, it's more than 100% from where we are right now. So if you are looking to get an entry point on the stock, and if you are bullish on the company, and if you've done your due diligence, and this is a good long-term play for you, this is a great entry point right now even. But if you want to wait and try to get an amazingly auspicious, really, really, really good entry point, $3.28, anywhere from that low to $3.35, anywhere in this range, right? Anywhere on this ascending level, draw it up. Make sure you have the most recent touch point perfectly validated. With your trend line where you draw it, as far as the location of where you actually put the trend line on the chart. That's what we're looking at. Let's take a look at some moving averages though on the daily. We do have the most important cross recently. I mean, fairly recently. It was last year, but we do the 200-day EMA crossing underneath the 15-day moving average, and we also have the 55-day moving average above the 200-day exponential moving average. These are bullish signs. The MACD, though, on the daily, we are looking pretty bad. If you are looking for an entry point and you want to be a short-term swing trader or even long-term, whatever, you want to see some confirmation as far as the MACD line, the orange one actually crossing back above the signal line, the blue one. That's where you're going to want to be looking at. On the RSI, though, let's take a look at the 4-hourly RSI. We're looking at 40.20. That is fairly oversold. We're on the oversold side. We're closer to it than overbought. On the daily RSI, the relative strength index, we are looking at 41.19. So this is not bad. We're oversold. We are closer to the support line than resistance. We are in a bull pennant pattern, and we do have the two most important golden crosses. So this is not a bad stock. This is not a bad setup, in my opinion. Taking a look at the Bollinger Bands, we are seeing, this is actually slightly bearish actually, we are seeing some hooking out on this bottom Bollinger Band right here. And typically when you see a stock move to the downside or to the upside and the bands hook out, it has a higher chance of continuing to run down. But of course these indicators are not always correct. Okay, just looking at if you would have got in here when they continued hooking out, actually you could have turned them a nice profit, but obviously you would have had them in quick because it did not actually really last for that long, right? It was hooking out still and it was going up, but it actually did the opposite of what the band's likelihood tells us should probably happen. So just be careful. These indicators are not always right, and this is not a bad entry point in my opinion right now, especially if you can get it at a better price. So that's what we're looking at. That's essentially all I got for you on this one. There is going to be some short-term resistance on the 4-hourly. We do have pretty much every death cross, almost every death cross that you could think of. The only one we're missing is the 55-day moving average below the 200-day EMA. But we recently do have the 200-day exponential moving average moving above the 15-day MA, and that's the most bearish and the most important death cross, and the one that you don't want to see. But it's 4-hourly, okay, guys, take it for what it is. The daily is much more significant. And also here's another thing that I actually missed. Okay, we are actually closing our current price on this is literally on the 55-day moving average. Watch for a bounce. If it bounces, this 55-day MA, that if you want to play the breakout and get in right as it's bouncing and ride the wave up, that's not bad. If it breaks below it though, that essentially means that that's going to be a strong level of resistance in the near term, and get in right here, get in on this ascending level and ride the wave up, ride this bull pennant. Obviously, you got a little bit, I mean, not really, you got less than half a month, you got like half a month to wait until the breakout day according to this bull pennant. That's what we're looking at essentially as far as Ocean Power Tech goes. Taking a look at APPH, we are in a bull pennant, a symmetrical triangle, or a bull flag, whatever you want to call it. We only have 2 touch points on this descending level of resistance, though, and we only have two, maybe 3 touch points on this ascending level, so it's not as surefire of a chart pattern as it would be if there was more validations. That's what you want to see. But guys, macroscopically, we do have a lot of bullish indicators. We have, number one, we have the RSI is not extremely overbought. That's better than being overbought. Obviously, we're closer to oversold than overbought. But more importantly, we have both get golden crosses that you want to see when you're a shareholder of a stock and you want it to go up. You have the 200-day EMA below the 15-day EMA, and you have the 55-day EMA above the 200-day EMA. So this is very bullish as far as momentum and sentiment towards the stock. If you want to get an entry point in the stock, your first level to watch, if you just can't wait and you want a decent entry point, your first level is going to be $29.30, sitting at this 50% retracement level. If you want an even better entry point, this is what you're going to want to do, in my opinion. Anywhere from $28.30 all the way up to like $29.92. Anywhere under 30 essentially is not going to do you bad, in my opinion. Anywhere, especially if you can get it right here when these levels intersect at $29.24 roughly, something like that. That's going to be extremely auspicious. You have two support levels intersecting perfectly. It's going to be a very auspicious level. But guys, on the daily, be careful. We do have the MACD line, the orange line. It is gapping below the signal line. But we are going to be approaching overbought, especially, and if we do continue, if this MACD line does continue down, we are going to be testing the support level, likely to see a strong bounce. Last time we saw this, we bounced up from $20 all the way up to $24 in a day, right? So this is going to be a strong level of support short term based on the technicals alone, a catalyst, or if this is a bad company, I don't know anything about this company literally besides their name and the technicals. They can suck as a company, but if they are a good company, according to technicals, there's a very high chance that we'll see a strong bounce off this level. And let's draw up a price target. This will be the price target. These are not always accurate, guys, so be careful. Don't just set your sell order all the way up there. Let's go to the weekly and see if we can actually see this. It's all the way up there above $50. That's nearly a 2x. That's nearly a 2x. So you're not looking too bad as far as the price target. Of course, that's a lot of upside. And this already is worth $42, right? I don't know if they've done any reverse stock splits, but if they haven't, that's very unlikely that it will happen, at least in a short amount of time. Usually these price targets with the stocks that I do deal with, these price targets actually come to fruition fairly quickly, like within a couple weeks, if not days, if they are going to. With this one, I can see this price target, taking months, if not years to hit. I mean, if it is it's going to be slow moving if it's $42, or at least a little bit slow moving. Okay. Who knows? It could go there in a day. Who knows? Okay. It's unlikely though. Very unlikely. So that's what we're looking at as far as those indicators go. Let's take a look at the Bollinger Bands. Wow, we actually are seeing a pretty clear indication of where price action is likely to go. We are seeing basically this confirms and reassures this bull pennant thesis that I have based on these four validations. And the price action, we are seeing some massive hooking in with the Bollinger Bands. This indicates to me lower volatility and a high chance that when we actually see these outside levels, that we're just going to continue to bounce in them. If we were to break them, then we would have another additional level of support with these Bollinger Bands. These levels do act as support and resistance, similar to moving averages. They essentially are moving averages, but they're a little different. They're Bollinger Bands, right? So just take that in mind. That is actually, I would say that's fairly bullish in my opinion. Like that's better. That's what you want. You don't want to see them hooking out when your price action is declining. So that's what we're looking at as far as the bands go. And that's essentially what we're looking at. Your entry points are going to be, anything under $30 is good in my opinion if you're bullish on this company, short or long term. Taking a look at NSPR, we are in another bull pennant. This one is a lot more surefire in my opinion. We have 1, 2, 3, 4, 5, 6, 7. It's basically 1,000 validations that does any support. Not really, less than 10, but we have a lot of validations. And on this descending resistance, we have 1, 2, 3. 3 levels of 3 validations on this one, on this level right here. But guys, take a look at the moving averages. This is not really what you want to see. I mean, we do have one very bullish golden cross. We have the most important golden cross. We have the 200-day EMA just recently this month, a couple weeks ago on the 11th of February. 200-day exponential moving average moved underneath the 15-day moving average. That is extremely bullish sign. That is the most important golden cross you can have. But right now, it's trying to essentially erase erase this golden cross, and we do have 55-day moving average below the 200-day AMA. That is bearish. This is not what you want to see. You want to see the 55-day moving average cross above it, above this red line right here. If you're confused on how I'm getting these numbers and this random moving average, the MA, EMA, 200, all this stuff, this is how I'm getting it right here. It's pretty simple, really. We are trying to see a bounce, trying to get a bounce off this bottom ascending level of support, excuse me. And guys, let's drop a price target. Based on this bull pennant, they do break to the upside most likely, and a lot of the times they do hit these price targets, but not always. Not always. Your price target is going to be $1.66. And guys, remember, with these OTC stocks and with these low cap penny stocks, micro stocks, right? Everything is more volatile and everything is less for sure. And everything has a less chance of happening, essentially, with the technical analysis. And this is because news and insiders and institutional ownership and everything, every retail investor, every wealthy retail investor, everything affects the stock more because the valuation is so low. When you look at large cap stocks, they have so much money poured into them that if a couple of retail investors that have a couple $1 million decide to sell out or buy in, it doesn't move the stock as much as it would if they were buying in on this stock that's an OTC ticker. All right, so keep that in mind. That's something that I don't actually touch on. I will be. I need to make that more clear, but that's an important point. But guys, if we do dip to this ascending level of support, your levels to watch are going to be 82 cents going all the way up to the breakout. 85 cents roughly, anywhere in that range based on the technicals alone is a good entry point. But guys, one thing that does scare me about this stock is that you only have one golden cross. You also didn't really see much of a bounce really off of this ascending level. Last time we touched this, before this, we saw a huge bounce, right? Now I'm not wanting a huge bounce. I'm not expecting a huge bounce like this. I didn't like want that based on, this bounce, but what I would have liked to see is a bounce, maybe some consolidation in the middle here, then retest this resistance, then get rejected, test the support level again. Something like that would make me a lot more bullish on this. But since we didn't really see a strong bounce, that could indicate that there's a high chance of the support level breaking in the future. And if we do break this, your next level to watch is going to be this 55-day moving average. Probably if it does gap, well, not really gap, but if it does continue to climb higher and moves above this level right here that I'm getting here. Let's go ahead and draw a rectangle so it's clear. This level right here, roughly, this is going to be another level of support because this has acted as a resistance level and a support level in the near historically in the near past historically. So that's what we're looking at. Don't set your sell order all the way up here. So just keep that in mind. Taking a look at the relative strength index though. On the daily, we are a little oversold. That is bullish. We're closer to being oversold than overbought, but not by much, guys. So be careful with this one. Also, the MACD, you want to see if you want to play the breakout. That's always a great option on these bull pennants. Watch for the orange line, the MACD line crossing above the signal line. That's going to be a very high probability trade and an auspicious trade, in my opinion, for NSPR. Taking a look at HVBTF, this is a very weird one. We have 1, 2, 3, 4-ish touch points on this ascending level of support, and we have 2 touch points on this descending level of resistance. Obviously, this isn't really a surefire chart pattern. Essentially, this is just what it's looking like. It could be, and of course, not. Of course, nothing is for sure with these OTC tickers and these low cap penny stocks. Anything less than like $15, $20 even. They like to not really respect the technicals and the support levels and the resistance levels as much as large cap stocks. Okay. So that's why you have to be even more careful when you invest in stocks like these. And that's why it's better to know about the fundamentals and the financials and the business model and everything before you actually take a position, even if it's a short-term position. Because guess what? If it's a short-term position and it dumps and you're down, you can just hold and just be taking paper losses and hold for a year or hold for a week or a month or a couple months, and then you'll be up again because it's a good company and you did your research and you know that the stock is a high chance of increasing dramatically over the long term or the midterm at least. So that's why you want to not just look at the technicals. That's why you want to have every view. But right now, guys, I'm just giving you the technicals and leaving the due diligence to you guys because I'm not going to go do a full video on all of these. Jeez, that would take literally 7 hours to do. It's already taking me a lot of hours. But this is what we're looking at, guys. We have a bull pennant. Let's drop a price target. And this is not really a surefire bull pennant, so I would just be careful about this one. We don't have many validations. Our price target is going to be above $6 before you go and throw your life savings in it. Just watch for some more validations on these levels. Watch for a retest Watch for a test of this ascending level, watch for a bounce, and look for a retest and a rejection off this descending level. You want to see it condense into the price action is condensing right here, and then you play the breakout or get an entry point on this ascending level with these bull flags. You want to play them in two ways typically. If you're not holding, if you're looking to get an entry point, there are two ways that I like to do. You want to get in on this ascending level, or play the breakout. Once it breaks, get an entry point. Make sure it confirms this is the new support. If it pulls back, if it doesn't, just ride the wave up to the price target. And if it doesn't go to the price target, if it's a little slow, take profits on the way up. Slowly exit your position and average out. Not average out. I don't like the term averaging out and averaging in, because it reminds me of Dave Ramsey just going in even if it's a green day. Don't do that. Just take profit slowly, okay? But then you look at some indicators, guys. On the Rotor Strength Index, we're looking at pretty overbought, 56.19. We're closer to overbought. I mean, we're not pretty overbought. We're closer to overbought than oversold, but we're fairly neutral. On the MACD, it's pretty much anyone's game at this point. It's going to be very crucial to see where this goes. We are still in bullish territory, but it is looking like the MACD line could cross below the signal line. That would represent some bearish momentum for the stock. Taking a look at the Bollinger Bands, let's pull these up. We are seeing some massive hooking out. Okay, what the heck? What the heck is this thing? What is this? Let's delete that. Okay. Okay, so we're looking at this one is hooking in a little bit, and this one is kind of just chilling. So basically, this one is signaling some decreased volatility. This is actually good. That's what you want to see if you're a shareholder, and if you got in already, like at 30 cents, and then just boom all the way up here. What you want to see is some decreased volatility, some hooking in on the bands, because what you want to see is it go like this, trade sideways for a couple of days, and then roughly, at the end of March, roughly, you want to see a break out of the upside and a hitting of this price target. Obviously, that's what you want to see, and that has a high chance of likelihood, in my opinion, based on the indicators that we're seeing and based on the technicals alone. As far as the moving averages, the golden crosses go, we do have the 200-day EMA below the 15-day EMA, and we have the 55-day moving average above the 200-day exponential moving average. These are bullish signs. So that's essentially what we're looking at. If you can get an entry point, if you want to wait for a pullback, this is going to be your best entry point, anywhere from $2.40 all the way up to the day of the breakout, $3.11. If you can't wait that long, get an entry point on this 21-day moving average or 55-day moving average. If you don't know how to do that, just download Webull. There's a link in the description. Watch my basic introductory technical analysis video. You will know how to do it. It's really easy. Okay, just follow the charts. You can just copy my chart and then get in with this 55-day moving average or this 55-day moving average. If you're super bullish and you just want a decent entry point, yes, you could go down short term, but if you can't wait, those are going to be your entry points to watch, in my opinion. Taking a look at DMGGF, we do have another descending triangle yet again. I think this is like the third one. We are looking at the hourly chart on this one. We do have a descending triangle. These are going to be your entry points if you think this is a great company. Anywhere from $2.28 all the way up to $2.44. Anywhere in that level, in that range, that's going to be an auspicious entry point if you're bullish long term. But guys, be careful. We did have a big run up. We were under $1 a couple months ago. Not even a couple months ago. This month on the 11th, we were, on the 12th and on the 16th even. On the 16th even, we were less than $1, and now we're trading above $2. So just be careful with this one. This is a bearish short-term chart pattern. If we actually draw up a price target, these bearish ones are not accurate, and this is also an OTC ticker, right? So it's even more volatile. But guys, the price target, if this bearish descending triangle were to come to fruition and break to the downside, your price target would be basically exactly at $1, essentially, or right under it. Essentially, that's going to be your price target. And it depends on where you actually place the price target, but somewhere in that $1 range, that's going to be the price target. Probably not going to happen, guys. I'm telling you out of experience, these descending triangles, they have less chance of hitting their price target than bull pennants do and bull flags, in my opinion, otherwise known as symmetrical triangles. But taking a look at the relative strength index, we are fairly oversold. We're on the oversold side almost. We are like looking at 41 to 46 on the relative strength index. According to the let's look at the daily moving averages real quick though. We do have essentially every moving average golden cross that you could push for. We have the 200-day EMA below the 15-day moving average. If you're confused on how I'm reading this and getting this information, this is the 200-day EMA, 15-day EMA, 13, 21, 55, right? It's pretty simple. We also have the 55-day moving average above the 200-day EMA, so this is bullish. This is bullish territory according to moving averages. The two most important golden crosses to me personally. Other people will disagree with me and say there's other moving averages that are more important, right? That's fine. Everyone does their technical analysis a little different. But that's what I think. So that's extremely bullish. Taking a look at the MACD, we do have potentially a reversal coming soon. The signal line is pushing higher, and the MACD line is trying to cross lower. Right now, there's a fair bit of a gap between them, and what you want to see is, well, what you would like to see is it come down, maybe come down a little bit, give you a chance to get an entry point, give you a chance to get in here right here, and then obviously push back higher. So this is, I would like to see an entry point around here, but guys, just be careful. I mean, we're not extremely oversold. We're not extremely overbought. We're basically, we're kind of close to neutral. So just be careful with this one. I'm not really super bullish or bearish on this one. If you can get an entry point all the way down here, that's not bad. I mean, the only real bullish, really bullish indicator to me that I'm seeing is the moving averages, golden crosses, and that's essentially that every stock that has ran up a lot, like 100 to 1,000% in the last couple of months, will have both of those golden crosses. So that's what we're looking at. If it does dip below this, your next levels to watch are going to be all of these moving averages. Sitting at roughly $2.15 is going to be the first one. If you don't know how to do these, and if you're scared, and if you don't, I'm not going to make an update, updating the TA on DMGGF, right? So download Webull. It's a link in the description, right? You will get free stocks, and watch out for when we actually come to these moving averages levels. If you're very bullish on the stock, those are going to be your next levels to watch. Taking a look at the Bollinger Bands, let's take a look at this indication real quick. Let's look at the hourly. Okay, this is a little confusing because there's like 4 red lines here. This is the 200-day EMA. This one is the outer band. This is the other outer band, and this is the middle one. If you're confused on where I'm getting this, look over here. It's a little confusing. I know there's 1,000 numbers. It looks like we're doing like some sort of some algebra, some college algebra right here, but we're actually not. It's pretty simple. But guys, as far as the bands, there's really no indication. We're seeing a little bit of increasing in the distance of the bands. That means increased volatility. There's really no indication, though, as far as the bands go. There's not a strong indication to me where the price action will go. So essentially, guys, I'm pretty neutral on this one, but I've told you the entry points. The price target to the downside is really scary, so be careful with this one. That's what we're looking at as far as DMGGF. Taking a look at IZEA, we have yet another symmetrical triangle. This one is a little weird though, because obviously if we actually pull this this support line, this descending level of resistance, pull this back a little bit, we obviously have a huge confirmed breakout, but obviously it was a false breakout. But breakouts that last 2 days with 2 daily closes above the level, it should act as new support. But obviously, this support, this trend line essentially is okay if we have it right here. Okay, technical analysis is not perfect, especially when it comes to OTC tickers and penny stocks and low cap stocks. So we do have a symmetrical triangle, bullflag. Let's draw the price target. The price target will be pretty nice, guys. The price targets are not always come to fruition, so be careful. Don't set your sell limit order at this, which is going to be, the price target will be above $8. That's 100% increase. That's 2x. So be careful. But guys, if you are looking at getting an entry point on the stock, there's 2 ways you can play the bull pennants, in my opinion, based on technicals. If you're bullish long term, these are going to be your entry points, anywhere from $3.70 up to the breakout day, right above $4, so $4.17, anywhere in that range. That's the first way to play it. The second way to play it is to wait for the breakout above this descending resistance line. If you're scared of remembering the exact numbers right here, and pausing the video and seeing where my cursor is at and what price it's at, download Webull. The free stocks, you will get free stocks as well, but map out these resistance lines and see where actually you can be, so you can actually, where the resistance levels will be and where you can actually play the breakout, so you're not just guessing and relying on my mega technical analysis videos like once a week or twice a week or whatever it is, because I'm not going to be covering these stocks every day, all right? Most of them I won't be covering very much at all, like if at all, all right? So those are going to be your level. Those are going to be the 2 ways to play this. Let's take a look. Let's take a look at the moving averages. We do have every golden cross you could want, essentially, besides the smaller ones. We have some slight death crossing coming in, but those aren't real death crosses, in my opinion. The real death crosses are going to be the ones dealing with the 200-day EMA and the 15-day moving average, which this is actually a golden cross in this case. The 200-day is below the 15-day moving average, and the 55-day moving average is above the 200-day EMA. That's the second most important golden cross, and both of those are green flags. That does represent some bullish momentum. Talking a little bit about this ascending level of support, though, we have almost 1, 2, 3, 4-ish And then we have a false breakdown. Was this because of the markets on the 23rd? Yeah, probably was. Probably unjustified, like a lot of other ones. BioNano, yeah, definitely BioNano. That was unfairly justified, unjustifiable breakdown, in my opinion. Right? That's off track. Okay, I'm going to stop right. I think. Hey, we also have this perfect validation right here, though, on this ascending level. So this is it's not necessarily maybe as strong as this descending level, but whatever the case, this is probably caused by the broader markets. All right, this is still a symmetrical triangle, in my opinion. Taking a look at the RSI though, the Relative Strength Index, we're looking at 45.81. We're pretty neutral. So yeah, as I said before, I mean, there's really not much else to say about this one. Get an entry point on this ascending level or play the breakout. Make sure you confirm this previous level of resistance, whether it be this one or this one, depending on when the breakout day actually comes. Make sure it confirms the previous level of resistance or the, this ascending support level as support and bounces higher, ride the wave higher. Play it to the price target if you get all the way up there, but know that there will be some resistance coming in at all-time highs, or at least the recent highs, sitting at roughly $7.45. Taking a look at the MACD, we're really not seeing anything. Let's look at the 4-hourly. Let's see if we can get some more indication. Okay, the MACD line, the orange line, is trying to cross over, but they're essentially just humping each other right now. Not much to say about this. Watch the 4-hourly, but the daily MACD is going to be more significant, in my opinion, along with moving averages, the RSI. The RSI is a little debatable, but definitely the moving averages and the MACD. The daily does represent some more significance, in my opinion. We're not really seeing anything. I mean, they're essentially just moving down almost they're almost parallel. Okay, obviously they're not going to stay parallel, but look for a crossover the signal line with the orange line, the MACD line. Look for a crossover the signal line, and then play the upside. That's a good entry point. If you want to play the breakout, make sure it confirms. Make sure the MACD line crosses over the signal line. That's going to be a high probability trade, in my opinion, as far as IZEA goes. Taking a look at LXG, we have this ascending level. This is a weird chart pattern, but we do have this ascending level that has 1, 2, 3, almost 4, 5, 6 touch points, and we had a perfect validation recently. Taking a look at the moving averages, we did recently have a really nice. We recently had both golden crosses that are actually really important. And guys, I actually did some research on this company before I found out that it was an OTC ticker, and I was about to get an entry point on the stock, but it's an OTC ticker, and Webull does not offer those. And that's where most of my funds are. So that sucks. That was a big letdown. But this is a good stock. And right now, guys, this is actually an amazing entry point. I was thinking of getting in on this ascending level right here, and that would have worked out really nice for me. Obviously, I would have been setting up up like 10, 15%, 8%, something like that. But yeah, your entry point is going to be on this ascending level. It's not really clear where the resistance is going to be as far as the trend lines go. Yeah, there could be. Yes, this is a possibility. All right, this is a possibility for sure. We have a lot of validations, but I'm not sure if that's going to happen. It definitely could. With this one, it certainly did, right? We basically had a breakout, and let's see if it actually hit the price target. It probably did almost. Let's see. Oh yeah, it hit the price target and more. So let's draw a price target for this one as well. See if the stock, and let's see if it actually will. It will be interesting to see if this actually comes to fruition later. $1.60, above all-time highs, or at least 52-week highs or recent highs. So yeah, this is, if you want to play the breakout, this could be another bull flag. It looks like a bull flag. We have several validations on each. And in the recent past, we had a similar really tight resistance line, really small, short-term, couple days, couple trading weeks at the most, right? It's going to be what? The 2nd of March, the 10th of February, right? So a couple of trading weeks in between here, really tight price action, condensing. I don't know, one of the two, right? But it's of the price action, and once we see a bounce out of this, a bounce off the support, if we come back here, that's your first entry point. Your second entry point is going to be to play the breakout. Make sure we confirm this line as the new level of support, or if it comes all the way on the 3rd of March or the 2nd of March, make sure we confirm this previous level of support. It's currently a level of support, right? Make sure we confirm that and get a bounce off this. Ride the wave higher, ride it to the price target according to the bull pennant, the symmetrical triangle of over $1.06. Taking a look at the RSI, we are a little oversold. Guys, I'm telling you, this is the most important thing. The trend lines are the most important thing as far as technical analysis. This is a good stock. I already know, unless something's changed, that I have some catalyst, some news, leadership team, product, business model, this is a pretty good company as far as I know. I did do a fair amount of research on this company, but this is a good entry point. This is a good stock. We did have most of the moving averages, golden crosses. We have the 200-day AMA below the 55-day AMA and below the 15-day moving average, excuse me. If you're confused, I know I talk fast sometimes and it can be confusing. Watch this, pause the video if you need, download the Weeble link in the description and actually draw these charts up so you can actually see exactly what I'm looking at and try to replicate the charts that I'm doing at before you actually see my chart maybe. And of course, even if you don't have the exact same chart as I do, it can still be right. Okay, everyone does their technical analysis differently, but that's what you're going to be looking at, guys. We have the second most important golden cross coming that happened really recently on the 13th of January this year, guys. That's very bullish. It's very, very bullish. And we also are in a bull flag. And the last time we were in a bull flag like this, literally the last, very, very soon, very recently, historically, right, it literally broke to the upside and blew right past the price target. So that is very bullish. This is a great entry point, in my opinion. As long as the markets don't dump, I see this breaking and hitting the price target eventually, or at least going to the upside and seeing some significant percentage gains from where we are now. This obviously is a very low cap stock. We're a penny stock right now. As long as there's no reverse split that I'm not aware of any reverse split as far as the stock goes. But we are an OTC ticker, right? So I think it's extremely unlikely that there was a reverse split. So that's what we're looking at. I mean, taking a look at the MACD, similar to kind of what happened right here, right after we kind of hit the top, the MACD line broke below the signal line, and then right when it kind of broke it, right after it kind of broke out, we did see MACD line come up. If you would have followed the MACD signal there, obviously you'd be sitting at what, $1.20. So what's that, like 15 to 30% upside, something like that. So that's looking. So obviously, the MACD line does not always indicate. It's not always perfect, but it is. It would have been accurate if you would have followed it solely and made your trading decision just on that. And right now, once you see this orange line cross over the signal line again, that's going to be extremely bullish. That represents bullish sentiment. That's what you're looking at as far as this. I mean, the RSI, yeah, we're essentially neutral on the RSI, but let's take a look at the Bollinger Band, see what we're looking at. We are hooking in a little bit. That signals to me decreased volatility, and we are likely to basically bounce in between these two levels and then break to one side or the other. A very high chance, in my opinion, of breaking the upside. We have validated this level of support many times in the past and recently in the past, and we do see strong bounces off of it. Right now, we're not really seeing a strong bounce off of it right now, but guys, I wouldn't worry on that. I wouldn't worry about that right now because the markets is kind of to blame for that. And the fact that this stock actually did well recently, and really has been holding up really kind of well. I mean, yeah, I gave back what is that, like 40%? Yeah, I gave up 40%, but look at where the stock was a couple months ago. All right, it was due for a pullback. It pulled back to this level of support. It always does, essentially, since November. It's essentially that's always its push. It pushes, it comes back, pushes, comes back, pushes, comes back. Right. As long as they hold this ascending level of support, this is going to be an amazing stock. It's going to do great things, in my opinion. That's what we're looking at, guys. As far as all the technicals go, let's take a look at my current positions. I did sell out of SOS. I got some comments of you guys. Thank you for letting me know. I did know there were some concerns about them actually even having offices, and I actually did some research. I read some Reddit threads. I looked at some Google images. I looked at their offices, their non-existent offices. And guys, there's a high chance actually that they don't even have any offices. So yeah, I sold out of that one completely at like a 10 to 15% profit. And I put the rest of my money in, I think it was CTXR. Yeah, I think it was CTXR. I might have put something in another thing as well. But yeah, CTXR I added to. Very bullish on CTXR, man. And it is at a great entry point right now. It was down. Let's see what it was down on the day. It was down 1% on the day, right? Yes. So yeah, anything that's down is a great buying opportunity. Any of these is a great buying opportunity. So yeah, that's what we're looking at. Nothing's really changed. Obviously, this is the weekend, right? Nothing could have changed since yesterday. Relevant information regards title is finished now. Feel free to click off. Extra useful information. Would you all like an auspicious dissenters subreddit similar to track stocks? Let me know if y'all would actually use this, and let me know if y'all would actually post stocks that you like. And if you don't know what track stocks is, firstly, go join it. It's it's the best Reddit that I know of for finding good stocks. It's not the best. I don't like that they are super stringent and draconian when it comes to who's allowed to post due diligences. I hate that. But, it also, there is a benefit to that, which is, every time you see a due diligence on there, it's got a much higher chance than it would compared to my way of being a great post, right? Of having a good of good due diligence, right? But anyways, I'm ranting. I'm already ranting. I didn't want to rant. This video is already 50 minutes. But guys, would you actually post? Would you actually use it? Would you like me to create a Reddit similar to Track Stocks? Let me know. If you have a serious suggestion or question, this is where you want to contact me at. I will make mistakes. Do not expect perfection from everyone. Use several brokers, guys. The platform that I'm using for this technical analysis, this platform right here, this is what the account page looks like. I mean, you can see 90. The only reason I have it cropped lower because, you know, my account number is up there. I don't want y'all to see that, right? But yeah, this is the platform. It's got any indicator you could literally want. It's the best broker in my opinion, and it's got great technical analysis. There is a link in the description. You will also get free stocks if you actually sign up with them. You will also get access to pre-market and after-hours trading with them. Know that our business model, which is, you know, part of our business model, is no asking for likes, no asking for subs, no putting ads on during the relevant section. This is what we consider the irrelevant section. It's pretty transparent. Okay, no one else on YouTube, literally not one that I know of, will tell you and literally make a screen and type out that this is the irrelevant section. Click off if you have more important things to do. No one else cares that much for your guys' time. I do though. Okay, I hope you appreciate that. I know you guys do. I know you guys are amazing. All right, but yeah, no, our business model is never going to change. That's my promise to you. Buy an answer to the moon. These will not be less valiant because they are unpraised. This is from Aragon and Lord of the Rings. I'm going to start doing like one quote a day, I think, or one quote video on this. Okay, just for the heck of it. I don't know. This is not financial advice. Thank y'all so much. I'll see you on the next one.